All right, here we go. Everything looking good. Should be live any second. Go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on 9/4/2022. And of course, as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So we got quite a bit to look at here. So we had our monthly and weekly wrap up, obviously daily as well. Still have the traditional markets closed tomorrow for Labor Day. Happy Labor Day to anyone celebrating in the USA. But that being said, we've got quite a big month ahead of us. Over the next couple of weeks, we're going to get a lot of inflation data. We're going to have shortly after that the next Fed meeting. And more likely than not, very high probability, our next rate hike as well. So we will just jump right in with the TNX. So TNX had a big move up here, and then it actually closed down after that. Not crazy to think it's coming down here to fill that gap regardless. The thing to pay attention to here on the daily is we have a hard sell signal, but we're still well above the 80 bullish control zone. So part of the criteria is not just the cross, but also the exit of the bullish control zone. So there's a probability we come down here, we bounce that area, push back up again, see continuation. That seems more likely than not to me right now. And then obviously on longer time frames, now that we've had our daily, obviously, weekly, we're pushing up here. This doesn't look toppy to me at all on the weekly. If anything, it looks like it's starting to roll over back to the upside. Trying to reclaim the slope line here. Now, if it should bounce up on here and start to roll over, we can reassess from there. But this looks like the beginning of a very strong bull trend. Here, you could argue it was looking like it was getting ready for a deeper pullback, but it basically bounced almost immediately and is now on its way up. So right now, I'm not going to be the guy calling for a top or a double top, especially not with all this stuff going on like macro. And then on the monthly, again, we have closed that monthly above the 200 exponential and simple. 200 exponential has a blue slope already. 200 simple is basically flat. Not crazy to think this kind of goes sideways or just hangs out. The more time it spends above this level, the more bullish it is, even if it's just going sideways. Obviously very bullish on our monthly time frame. So if we just switch over to the 210 spread here. So I have this up on the weekly. Obviously the thumbnail was an old one from way back when rates were under 2%. They were like back at like 1.7, 1.8. Obviously since then we saw a massive continuation. Again, similar situation where everyone was in here trying to call the top because we're coming up against this resistance line. And normally it would make sense, but the difference between a good trader or good technical analyst and a really good one is being able to tell when there actually is something different this time. To give you an edge as to whether or not you potentially could be breaking out or breaking a trend. And obviously that was the case. We were able to get ahead of that. And since then, it's been a massive move in markets and it's given us a huge edge. So at this point in time, we know each of these various peaks and then the flip. I'm going to actually turn off. Here we go. So now these lines just represent the movement of the 2-year. And so we see normally the 2-year is going to be lower yield. And as the spread closes, as the gap closes between these two, I'm going to turn it back on for a second. The more orange there is, the bigger gap there is between the 2 and the 10, saying that people are confident in the future. As it starts to roll over and the gap reaches its highest maximum, it's saying like people still think the future is good, investors still, okay to invest in the future. But as we get further and further here, people become more hesitant to, essentially loan money. That's what they're doing when they invest. They're loaning money or, reinvesting in their own company, et cetera, et cetera. So as this spread tightens, essentially people are just becoming more tight with how they invest or spend their money. So we know, maybe it doesn't top out here, maybe it does top out here, but as long as it's running, as long as we're continuing to the upside, the top doesn't matter until it actually happens, starts rolling over. And then when and if it does roll over, there's going to be a massive, the percentages will look kind of different because this is like the yield spread. But, here the spread is 466%. between the bottom and the top. Here, they're tight to each other. So while we don't necessarily want to call the top and try to like short into like the spread or like bet against, you know, continuation. Obviously, we don't want to try to pick the top. But when it's ready on the way over, like down, when it rolls back over, you know, when we start to get one of these arrows, these toppings, the flip of the 8 and the 21 on the weekly time frame of the TJD Master, when that starts to happen, then we'll look for afterwards, we get these, you know, the red arrow is the flip, and then the white vertical line here is a recession. So then we can start looking for the actual recession and the confirmation and rolling over, and then the slowing period lasting for, you know, potentially year after year after year. So we don't want to sit here and call this is just going to flip over and just roll over right now. But we know when that happens, that tells us, okay, now it's time to shift and start investing or trading differently. But there's still the whole big swing back to where it actually has to roll over. Then we see, you know, the 821 crossing on the weekly. Then we see the recession gets confirmed down the line. So we're not even seeing the first sign yet. So in my opinion, looking at this on the weekly, sure, the yield curve has technically been like inverted since back here at like 1.8. And now we're up here at like over 3.5. So we could easily have a yield curve that's still inverted up here at 5%, which is that previous peak that we're looking for from like 2007. It's not crazy to think that. Or that we could even go back to the peak back here from 2000. Not crazy to think any of that could happen. So we're not necessarily trying to call the peak on this. I think that's the problem. A lot of people are trying to call the peak and saying that's it. It's going to roll over. Rates can't go any higher. We're just, you know, going to go into recession immediately. But in all actuality, we know, okay, wait, there's still like 3 other steps that happen before we worry about the recession part of it. So that's how I'm looking at it. I think this is a really important chart, and seeing as how it's developed, how this essentially just went parabolic. Remember, people were calling for a top back here, and then they were calling for a top back here at resistance. And now here we are broken out and took out that previous high from 2018. People are calling for a top. So, I mean, they'll be calling for a top right here at 5, and maybe I'll be calling for a top by then. But I mean, let's not try to get in front of this thing, because right now it's going absolutely parabolic. It just broke the last real resistance. So there's a couple little spikes right here, but I mean, more likely than not, we're headed up to like 5-point-something%, which again just further goes with like the theory of Fed funds rate potentially getting up in like the high 5%, etc. So looking at U.S. oil next. So we did see that close, basically those last couple daily closes at the lows, new lows. Again, it still just looks like we're coming down. Now, this is the last line of support, basically. We have the breakout of this descending channel. We pushed up and hit the 200s, and then we're back testing that channel. And then we also have the red. We also have this orange channel right here, the support down at the bottom. And we're basically at that support. We're at that previous low. And we're at the, if you extend this out just a little bit, we're basically at that same level. So everything kind of converges on the same spot and tells us, okay, if we break down from here, we no longer want to be interested in this, and we're likely going to one of our lower targets. But, you know, if we find support here, we're likely to get the continuation of that move. Now, coming back down and double bottoming is not a strong sign by any means. But if it holds, you know, we have to respect it and say, okay, it likely does get a bounce back up and probably does try to get above the 200 exponential or simple. But as long as we're trading above 86, and below 97, I mean, as far as I'm concerned, this is just range bound and likely goes nowhere. So Dow Jones, that daily close rather, really all of the closes, I mean, that was pretty brutal. I was looking there for a bit, you know, one little day up, people were getting bullish again, and then a little gap up after that. And again, people were getting excited, saying that was it, the bottom was in. And then by the end of the day, we took out that whole gap up move and then also bearishly engulfed the day before that. And again, just complete rejection off of the 8. So it's very clear now we're confirming into the bear market and likely now headed back down here to the lows. And statistically speaking, after we get rejected off the 200s, the next move is to put in new lows. We saw it right here. We get rejected at the 200s, new lows, you know, continue new lows. Here we get rejected again. So likely new lows, and then we'll see where we're at from there. And then again, people are trying to get very bullish on the stock market. Look at this weekly now. So this was our previous weekly. You know, we had identified that as a shooting star, you know, bearish topping candle. We had previously seen one right here. That was the absolute top. You know, we saw a series of, you know, topping candles here. We saw another, you know, indecision or topping candle here. One more right here. I mean, some pretty clear signs from the market that we were going to be continuing to get rejected. When we saw this one again, and then obviously just, you know, big bearish moves down. This is exactly what we discussed in advance, how close it would look like here in real time. The 8 and 21 on the weekly, we're going to cross to the upside and everyone would get bullish, and then it's just a complete throw over. And then obviously with our descending resistance, what did we do? We just came up here and just nailed that resistance once again. Tricked everybody that was trying to buy the breakout right here. And now we're back down at the bottom. On shorter time frames, there's a little bit of support at this level. It's also the 236. So that's the lowest you really want to see this bounce. But we basically had the bounce off the 236 on the weekly. Came up, back tested the 382, got rejected. So likely we go lower. If we put in a new low, it's going to look bad. Obviously, we have the 200 exponential and simple below us. So maybe we come down here, double bottom, and then we'll see what it looks like. Looks like a pretty clear rejection right now. Obviously, a lot of people are going to be calling this out in hindsight. But being able to identify that ahead of time obviously gives us a big advantage. And then when we look at the macro on the monthly, it looks terrible. We're well below the 200 exponential and simple. We closed down there. We tried to push back over the last couple of days. And then we saw that weekly and daily rejection. And now here, this is a very clearly monthly rejection as well. So we have basically failed to stop the 821 bear cross. So what do we expect? Well, we would expect until we get back above 324, just continued weakness. Looks like new lows. I would expect by the end of the month we are lower than 307. Not good. Obviously, another key area that we'll be watching here will be that previous top from 2020. That will be a key level for us to backtest to. Now, obviously, the Dow has stayed much stronger. Many things have at least touched that level or bounced off that level, but that would be 286 on the Dow Industrial Average. Then if we go over to the SPY there, let me switch that back to the daily. If we go over to the SPY, it's very, very similar situation. Obviously, holding up about the same for now. We're expecting that next leg down. The 236 is just a little bit lower here. Again, you could expect some temporary support, but we don't want to get overly excited for this by any means. So, but basically the same chart. QQQ, very much similar as well. The Russell also hanging on for now, but not looking particularly great. So SMH Semiconductors, one of our leading indicators, came down here, almost took out the low. So we're really watching this. We saw some of the bigger players, including NVIDIA, flip and come down here and take out the low. That's a big sign. That is a big sign for sure. When the leaders start becoming the laggards or the leaders to the downside, that's when the market can really see like an actual substantial hit. As long as like Apple and Microsoft and NVIDIA, Amazon, they were all holding up, the market looks a lot better as a whole. If they start breaking down, it's a big deal. So let's look at the daily, weekly, and monthly close on the DXY. So here we are at highs on the daily. So even with that little weakness we saw, it got bought completely back up. That was enough to allow the assets, traditional markets, to rally. And then again, basically got that rejection. And we saw all flow back into dollars. So now dollars basically up here, putting in new daily highs. No signs of topping for now. If we go out to the weekly, again, nothing toppy whatsoever right here. I don't love a buy signal at the top of the range necessarily because there's just not a lot of room to run. If you get a buy signal in neutral range, there's plenty of room to continue running. If you get one at the top of the range, doesn't mean you don't keep running to the upside. There's just a lot less potential for like the big moves. But everything's bullish here. 200 exponential crossing above the 200 simple. 8 and 21, very, very bullish. Top of the range. Stochs are crossed positively to the upside, about to enter into the bullish control zone. All grain histograms, blue slope above the zero line. The DXY is extremely, extremely bullish on the weekly. And I mean, that monthly close was just, strong. Very, very strong. And now here we're immediately getting follow through in the first week came after that. Few days really. We're in the bullish control zone. Stochs are angled to the upside, all green histograms, blue slope line above the zero line. Again, everything postured how it should be. This looks like the beginning of a macro, like powerful uptrend that will last for likely years. And you don't have to like the dollar to believe that. You don't have to like America. You can just like reality, and that's what reality is telling us. Like it or not. There's a lot of people out there who have a strong fundamental case for why the dollar is bad or America's bad or whatever. But, you know, you can listen to what they have to say, but make sure you don't confuse that with the technicals. Because right now the technicals are saying, sure, they might be right eventually, but, you know, if you're betting on it, you can't just be right eventually. So Apple, still pretty strong. I want to look at the progression of these charts, okay? So when we look at this Apple chart, we see a strong uptrend, you know, all blue, 200s, you know, lots of green. And then here we see a lot of red for once. And then we start rolling over the 200s. Here we get a back test back up, but still another lower high. So even though it was a bullish push back up, it was still a lower high. So it doesn't change the macro outlook. And now here we're trying to hold the 200 exponential and simple, back testing support. Now let's look at Tesla. Tesla's like slightly weaker, but still good. We have a high, a low, a lower high, a lower low, then another lower high. It gets at least back to the 200 exponential and 200 simple, although it's getting rejected and likely goes lower. But it's not quite as strong, but still pretty strong. Now look at Microsoft. Crosses below the 200 exponential and simple. Weaker move back up here. Tesla and Apple had the moves almost back up to the highs. And then here's the third push back up. Barely gets to the 200 exponential. Barely gets to the 200 simple. And then again, another lower high. Nowhere near what we saw in like Apple or Tesla. So as we kind of go down the down the list here, we can see the difference between the strong and the weak. And it becomes even more and more clear the further down we get. So now here's Google. You know, Google basically pushes up, double tops essentially right here. Then a lower high, much lower low, just extreme downside. And then goes sideways for a while. And then finally touched the 200 exponential. Didn't even get to the 200 simple. And is already back down at those lows again. So it's like, whoa, that one went from really strong to now it's looking pretty weak. Now NVIDIA, you know, puts in a pretty big peak right here. Massive uptrend, lower high, lower lows. I mean, just very weak. A push up here doesn't even get to the 200 exponential, nor the 200 simple, and already putting in new lows. Very weak. By far the weakest so far. So we can see, you know, essentially, I only put a couple in order like that, but I just thought it was funny when you go down the list and you say, okay, that's decent. It's at least holding above the 200 exponential and simple. Uh-oh, that one's kind of weak. It looks like it's getting ready to get rejected. Uh-oh, already getting rejected and going lower. Oh, couldn't even get to the 200 simple, you know, rejected at 200 exponential. And then it's like, oh, didn't even get it to either one and already putting in new lows. You can see the progression and what's likely to happen and how the stronger ones are kind of holding up. The middle ones are like, and then the weaker ones are, you know, like NVIDIA right now just looks terrible. So then you have something like Amazon. We can kind of compare that and see where that's at. And then obviously Meta never even got a bounce. I mean, this was the bounce of recent where Apple went to almost new highs. You know, Meta basically couldn't even get past its previous level of support. It's now obviously resistance. And now here it is again at the lows. So we see the difference in a lot of these things and where they're potentially going. And I mean, Meta looks terrible. This is the 2020 peak on Meta. Remember, the Dow Jones hasn't even come down to that peak yet. It's still like up here in this level before Meta's gapped down. I mean, this is the Dow right now, but it just got rejected coming back down. Meta gapped down and just melted down since then. It's already about to take out the 2018 lows, or 2020 lows rather, already back here essentially. It's wiped out anyone's gains from 2017. So very weak. A lot of times when you see a chart looks like this, it doesn't always recover. So it's worth paying attention to. Twitter, again, you know, bouncing back up here, getting rejected. This one at least is forming some kind of triangle. There's a little bit of potential for it. Obviously holding on because of, you know, fundamental reasons. Obviously, if Elon has to buy it for $50, you know, the shares are valued at $50. So what are you seeing in the market between the difference in the actual price of Twitter stock and, you know, the deal price, $52 or whatever? Well, you're seeing, you know, the amount that you have to pay for the risk that the deal doesn't go through. Or if it does go through, it's not as favorable. So if actually the deal goes through at 40, you know, if you bought it at 32, you still did okay. But if you bought it at 50, you lose money trying to arb that difference. You know, and right now the market obviously is pricing in a lot of uncertainty, or else the stock would just be valued at whatever the deal was, $52 or something. What's going on, guys? Good to see you. Adam Asotos, How you guys doing today? So taking a look at Bitcoin here, I know we saw a little push up here at the end of the day, and that's always nice. It makes you think like, oh, the bulls are still alive. We got bull cross right here. That's kind of bullish, right? But then when you look at the daily and you just say, okay, this is the daily chart on Bitstamp. Nothing happened. Really quick, let's flash the futures. This is our futures. It doesn't open up, obviously, because the markets are closed for Labor Day tomorrow. So it'll be closed one extra day, so it'll open tomorrow around like 7 p.m. Eastern Standard Time. But it closed at 19,840. So we had a little push down yesterday, whatever, and then we came back up to 2,000. But, 19,840. We're at 19,935 right now. So we're like $95 off of that price. So that little bit of moving in and out is like, oh, something's going to happen. Nothing's going to happen. Is it bullish? Is it bearish? Really nothing happened. So, this is the tightest trading range Bitcoin has been in a long time. Even through here, when it was a tight little range, at least it was kind of trending up or down. We're basically just in one of these right now. And we know for sure there's no way the daily can even begin to be bullish if we don't have at least the 8 and 21 cross to the upside. And last time when we got rejected, that was our big move down. So we're not even close to that. So could we get just rejected out of the blue right here and just melt down? Definitely could. Definitely could. Matter of fact, the longer we spend under the 8, the more likely that is to happen. If we can get above the 8, maybe we can back test the 21 at like 20,800. But like that's our bull case right now. It's like, oh, if like Bitcoin is super bullish and just a bunch of buying pressure comes in and we just hold the price strong for long enough, eventually, we can move up and back test 20,800. So it's like a $950 move. It's not terrible, but let's be real with what the possibilities are. That's the big step for the bulls. Now, if that doesn't happen, Bitcoin just gets pushed down because the moving averages, same way they act as support when we're above them, when we come back to touch them, and they keep moving price up, they act as resistance if we can't break through them. So, if we don't break through this, we will get rejected and go lower. And the threat is now we have a high, a low, a lower high, a lower low. This little lower high, however it works out, and then we get a lower low. The threat is that there's not enough room left before we take out this low. So the real area to watch is still, and it has been, is still 18,950. If we break below that and close a daily below that, that is a new low from back here. So the one good thing that Bitcoin has going for it right now, while it basically does nothing, is it's not putting in a lower low. So that's good. That's literally the first step of like 100. So it's on step 1, but so far it's not messing that up. Now it's getting close. Lately, these last few weeks, it's been getting closer and closer to messing that up. But the longer it doesn't put in a lower low on a daily close or wicks, however you're doing it, as long as you're consistent, the longer it doesn't put in a lower low, the better. We're threatening it now. So this is either a really good opportunity because we're back down threatening the lower low, and we're not going to put in a lower low, in which case, there's maybe some meat on the bone. It starts off small, but then we build the same way Slinky Theory builds on the way down, 4% to backtest to 21. And then, after that, we're backtesting like this little cluster here. So we're at 15, 20%. And then if we bust through that, we're putting in a new high. So we have a low, then a high, then a higher low. So now we're putting in a higher high. Maybe we get back up to 200 exponential and simple. We're talking about 40, 50% moves, $30,000 Bitcoin. Okay. But before we can get any of that momentum, before we can get excited, before we can start talking about, 50% moves to the upside and $30,000 Bitcoin, a lot of little stuff has to happen first. A lot of little stuff. And the one thing that we've been talking, obviously I've been very, very clear. This is the area to watch. 18,900 and, 18,900 to 950. That is the area to watch very, very clearly. But let's do something we don't normally do and go down to the 4-hour here. This is the thing I've been talking about where there was potential over the weekend. This was our Friday close right here. Okay, we get that like push up and it was trying to cross the 821 bullish. And I was literally saying, assuming the bears don't come in here and just completely smack this down and we don't get a big red candle. And then literally, that's what happened. So we see now we're at that same level again where we potentially could see that 821 cross again. So, we still have this low right here. Then we have a lower low right here, was creating some bullish divergence between those 2 points. And then here we came down and we didn't put in a lower low on the 4-hour. So we put in another bottom here, but, you know, didn't really get that extra drive of divergence. Now, if we would have pushed down here and put in a lower low, or if we do now, that would be great, because then we could build potentially another drive of bullish divergence, and then it would look a lot more possible or probable, you know, that we backtest 21K, and then after that, you know, the 200 exponential, 200 simple, 21 to like 22K. But again, before any of this stuff can happen, before anything can flip bullish, before we could ever talk about 30K, we have to cross the 821 bullish. So until that happens, I can't get bullish on Bitcoin at all. Once it does happen, you know, that same resistance level is key, right around like 20,500. If we start closing 4 hours above 20,500, you know, we can start looking at what's the risk reward on all this trade setups. We can start looking at it right now and say, okay, if this holds, you know, what's our risk reward? What would we be looking at? You know, potentially a move up here, 7 to 10%. And what would be our downside? Well, we know if we close down here, start taking out these lows, that's going to look pretty rough. So 1 or 2%. Now, what if we do get that push down, close a lower low, print some more bullish divergence? Do we just re-enter then when that happens? Do we, you know, wait to enter and see if that happens and then take a continuation trade? I mean, the choice is up to obviously the individual. There's definitely a potential argument for either. You know, if we get that push down here, that's going to look like the perfect setup to me. So is it crazy to think we get an aggressive push down here, close a new low, everybody gets super bearish because we just took out the 4-hour low, and then suddenly we print bullish divergence, you know, on both of our indicator oscillators, and then get a push up here? And it looks like what? A spring, basically. We break down to a new low, take out a bunch of stops, and then that spring propels us back to the upside. You know, that would be the bull case scenario. Bear case scenario, we break down, put in a new low, and then Bitcoin just melts down to zero. So, I mean, got to watch that cross, 4-hour, 821 cross, as close. Still just keeps getting rejected, though. So, you know, you got to assume that it's going to keep getting rejected. Obviously, the bulls have been trying to cross it up. So, the longer it goes without the bulls crossing it up, I mean, the longer the bears are winning, in my opinion. So, maybe some strength comes in before end of stream. But right now, you know, obviously on the daily, very bearish. We have the hard buy signal. We're still in the bearish control zone. So if we push up here and get out of the bearish control zone above 20, we could start paying some respect here. You know, here we got obviously the push up, and then by the time we got the hard buy and got out here, it was right afterwards. You know, we see basically it gives us that hard buy, and that's basically the rejection. And then here it looks like we're about to cross up here, another rejection. Here we're about to cross up here, another rejection. And then we melt down. You know, this was just to get through the 8. We get the hard buy, and that immediately gets rejected. And then here we get another, you know, hard buy. So what's that going to be? From the 8 to the 21? I don't know. I don't love it. I mean, if there was more confluence here, if we were getting the hard buy as the 8 and 21 were potentially crossing, as we were coming up on some resistance with little momentum in our favor, we'd be talking then. But this just looks like basically we ran out of steam trying to push up here, broke down, and we just haven't put in a new low yet. So while there's still this macro, you know, macro downtrend, obviously, on the daily, we're just putting in lower highs and lower lows consistently. And then we have a little uptrend right here. We're putting in, you know, higher lows and higher highs. And now here we're starting a little downtrend again. So while, you know, the big downtrend is the most important, the small downtrend is still important, but then this little downtrend is going to give us the most like recent or relevant short-term data. So taking out the low right here at 19,560 is the first step, obviously, to taking out the daily low and closing below, you know, 18,960. So in the same way that if we start taking out this 21 right here, crossing 821 on the 4-hour, we could start getting bullish maybe. A little bit, at least. A little bit. So Ethereum, you know, still down below the 821, kind of trying to fight to get up here. It's been hanging out a little more bullishly recently than pretty much everything else. Obviously has some big fundamental news. We saw it's been crossed up here. Here's the 4-hour. It's been crossed up here for the back test of the 200 exponential. It crossed down over the weekend, crossed back up here again. So what is the real, you know, move we're looking for on Ethereum? We talked about the two big scenarios in the recent in-depth Ethereum video, and the two, you know, in-depth Ethereum moves are essentially, okay, we have the 1, the 2, this is the 3, we came down for the 4, we found support on that yellow support line perfectly. And now we're getting ready to cross the daily back to the upside. And we're going to come up here, back test the 200 exponential and simple, and complete the 5. You know, and from when we're basically this resistance, which is the fib there, it's a 30% move back up to the 618, which is this fib right here. Or if we go slightly higher based on the fib extensions, etc., anywhere in this red box would be our target. So we have potential target for 30% upside here and 57% upside here with like a 12% stop loss either way. So it's 2.5% here, which is not good, or 4.8 to 1. So this one is, I mean, basically like below our minimum requirement to take. Now you could arguably run a tighter stop loss, or you could say that that's not really your target, that really your target's up here. I mean, if you have to start like making reasons to take a trade and not just following simple rules and simple steps, it's probably not a good trade, in my opinion, in my experience. So that's the, you know, bull case scenario right there. But the truth is, you know, the real scenario is actually just continuation to the downside. So here on the daily, you know, we have this 5 waves down, 1, 2, 3, and then it's just a matter of where's the 4 end. Is the 4 end right here, or does the 4 come all the way up here and backtest the 1, and then it ends there? And if it goes any higher, it invalidates this 5 waves down, and likely we have put in the bottom. But the way it looks right now, seems like if we break down from here, it's going to look like a pretty clear 5 waves. If we already put in the bottom here and we continue up, it's going to look like, hey, maybe, you know, we completed an ABC and we're going back to the upside. You guys know, obviously, based on that long-term video, my opinion. And, you know, without going and watching that video, or if you want to know what it's in it and you haven't watched it yet, I mean, this is the potential situation for Ethereum. We talked about the potential if we bought right now and then we did a 1.618 fib extension to the upside, versus if we bought lower, which was at our next target to the downside, and then went to that same target, versus if we bought even lower than that. And the truth is, you know, you're going to be fine either way. If you bought one of those and then we go to the 1.618, you'll be fine. You'll be fine. But the difference is massive between which area you buy at. What is it? Turned off for the weekly? God, so annoying. My bad. Just look at it really quick here. So essentially, if we bought right now, the target on Ethereum, the 1.618 fib extension, is, you know, 20K. So $20,000 Ethereum is 1,200%. Versus the same thing. That would be if we just bought right now and just held it. And then it goes to 20K. Which obviously, you know, far-fetched. Obviously, it's going to 0. But hypothetically speaking. And then you look at the risk reward and you say, well, what if it goes all the way down to where we thought it was going to be? 66% down from where we're at right now. And then the target to the upside is still 1,200%. So like a 12x. And then the next situation was, well, what if we waited and bought it all the way down here at the 0.5, which is where we think it's going to go, around like 650, and our target to the upside is still the same, and our stop loss is still the same. Well, the stop loss is 20% then, and then the risk reward is 150, because the upside target is now 29. Call it 30. It's 3,000%. So if it's 12x here it's 30x. And all we did was just wait, buy lower. So could you buy some here and some here and some here? Sure, you can do whatever you want. You can buy none here and all here. You can buy all here and never look at it again until somebody taps you on the shoulder and goes, hey, didn't you buy some of that Ethereum stuff? Did you hear it hit 20K? And then you could sell, you know, if that's what you want to do. And then the final scenario is if we come down to the 618, and then that would be just an entry at $400, which sounds crazy. Probably front run it a little bit, buy it like 420 for Elon. And that's 4,773%. And that's the same 20,000 target. So the difference ends up being, you know, basically 48 extra money, 29 extra money, or 12x your money. So it's a big difference. It's a big difference. But I mean, if you buy at 1,500 and it goes to 20K, are you still going to be happy? Sure, of course you are. As long as you can hold from, you know, current price down here without ever selling, and then ride it all the way up without ever selling, and then finally take profits. So, you know, having the right game plan is great. It's like people saying, oh, the dollar stopped. sure, maybe the dollar is top, but if it runs all the way up here first, you're going to be wrecked by then. So is that actually like useful to say like, oh, the dollar is going to top sometime in the next 2 to 10 years between where it's at now and up 100%? Like, I mean, come on, that's useless. So this is the important type of thing, in my opinion, to pay attention to. You could be a super bull on Ethereum, but also realize that there is still a ridiculous amount of potential downside risk. And, you know, we'll know really soon. We're really close to finding out. Because if we move back up here and get up to this level at like 2,500, I mean, that's a big deal. We're taking out like some key resistance and getting back on top of the 200 exponential and simple. Maybe this decouples from crypto and just goes absolutely parabolic. And all other cryptos just go into this like elongated bear market. And Ethereum is just like the dominator. The flippening happens. Vitalik reveals himself as a part alien, part robot. I mean, there's some potential scenarios here. Bitcoin dominance. Threatening the lows. Putting in lower lows right here tells us that people would rather have altcoins than Bitcoin. If we look at the Bitcoin dominance chart without the stable coins though, without Tether and USDC, we see that this was the recent Bitcoin dominance, and that here it's actually like much, much higher. So what is this telling us? It's telling us that this is giving us a picture where essentially this is with everything. Altcoins, Bitcoin, and stable coins. So we're at the lows with altcoin, Bitcoin, and stable coins. But here, if we take out the stable coins, we're not nearly at the lows. So that tells us that there's more people still in Bitcoin or in stable coins. So if you take out the stable coins, it looks slightly more bullish. So that tells you a lot of people are pulling their money out of altcoins and out of Bitcoin, but they're still keeping them in stable coins. So there's still some confidence in the space. People aren't like super scared of stuff going out of business or not being able to get their money back or whatever. So maybe when we saw the big scare, when, you know, Celsius is going under and there's all this like insolvency talk and everything, people get scared and maybe they want to go to cash. But now they're not feeling that same level of fear because they're keeping in stable coins. So that's definitely an interesting thing to keep in mind as well. And then the crypto total market cap on the weekly. So we bounced off the 200 simple. We back tested our moving averages. And we're back down here at the 200 simple. We're under 1 trillion. 1 trillion is a key area to hold. But in all reality, just getting above 1.16 trillion is massive. And breaking below like 890 is 890 billion is definitely a big deal. But this looks very similar to our Bitcoin longer time frame chart as well. And then Matic on its way back up here. Likely to test the 200 exponential and simple, possibly as high as the 382. We talked about decent little run up on that second trade setup. BNB, got to be worried. Well, I rather than worried, I would say got to be careful with this one. Technically, it was broken down from the channel. Channel was holding up pretty good. Had a nice pushback up to 200 exponential and simple, and then didn't hold it as support. And when that happened, the 821 crossed the downside. So it looks pretty bearish. If we break down from here and don't essentially get this next move up here, you know, we're looking at a pullback down to like 235. And you guys know BNB is like in a really, really massive topping pattern. So another breakdown here might be what it takes to get the momentum to eventually lose key support. All right, so how we doing? 39 minutes in, making good progress. So let's look at our metals here. So gold was a really bad day, week, month, in my opinion. This looks really bad now. So we closed at the lows, literally at the same level from a couple weeks ago, which is not good. And then obviously when we zoom out here and we look at the actual, you know, long time it's been trading in this channel, we put in all-time highs here, we put in cycle lows here, and then we back tested the highs and we've back tested the lows quite a bit. So we're still kind of in this like top channel, but in my opinion, this doesn't look good. I mean, realistically, we should put in, that's our support that needs to hold. You know, and then obviously the top fib is our resistance. So if we lose this area, it looks really bad. Now it should hold up, but the more times we test it, the more likely it is to break. Next target to the downside, if it does break, is going to be our fib at like 1600. Don't want to see that happen, obviously. But looking at the longer time frame charts, we've been over this like 100 times. On the weekly right here, this was the backtest rejection and then took us to the 200 exponential and simple. That's where we're at right now. So further breakdown from here is going to confirm, potentially put us into a weekly bear market. And when we look at the monthly, I've been pointing this out in advance too. This has been really, really peeking its head out. But this 821 cross on the monthly that took place here before the elongated bear market, I mean, it's the exact same rejection, the exact same crosses down. So I would think at least we're going to have a deep pullback on gold. This is pointing towards like 1350. I don't know what gets there. We'll look at it as like slinky theory, just stair steps down. 1600 is the next target. After that, it's 1475. After that, it's 1350. If you're a bull on gold, it's going to be a great buying opportunity. If you are, speculating on gold to try to make money and you're about to be upside down in your position, I mean, you got to make your own decision here. But, getting this cross is a big deal. We haven't had one in a long, long time. The last time we had one was here, and then we had a little fake out as we were consolidating before our last bull run. Bull run's over now. So, when we get these, gold tends to stagnate for a while. So, not good if this is happening here. And, I mean, it's already confirmed. So, maybe we reverse it. Doesn't look good. Silver looks really bad, breaking down to new lows. Did touch that fib perfectly, which is arguably good and bad. Bounced like literally off the fib perfectly. The next target to the downside on silver is like $13, 12.80. I don't think it gets there. I don't want it to get there, but I mean, I was saying when it was in the mid to high 20s, it was going to the teens. Well, we're here now. So let's see what happens, but it doesn't look good. Gold silver ratio. Gold is just dominating silver. Looks like gold is getting ready to go in a massive bull market compared to silver. So if gold's going down, silver is more volatile in the direction gold travels in. That tells us silver's going down faster. It's losing buying power. If you wanted to trade all your silver for gold, now's a terrible time to do it because you don't get anything. And it might be even worse 6 months or 2 years from now. Who knows? We don't fight the trends. GSG, so commodity index, lots of energy, hard commodities, the stuff that's supposed to be the best right now. And it's just hanging on to the 200 exponential and simple on the daily. Barely hanging on. Hard sell signal left the bullish control zone. We do have a blue slope line on the TDMACD. So there is some hope, and we're still in a bull market technically, testing support. But this is our third test of support. We did put in a slightly higher high. So arguably, great opportunity to enter. Probably is near the end of the trend. That's what it's telling us. 200 simple crossing above here. Maybe we even put in new all-time highs. But telling us we have lost our momentum and likely the end of the trend. So CCJ, for now, hanging on to this top area. I told you guys I took some profits here at the 786. We're consolidating here. It looks okay. It looks better than most other uranium stocks. We see URA hanging out between the 200 exponential and simple, trying to move back up here. We see UUU, same situation. Still got to be careful though. We basically have a double top or a high, lower high, lower high, lower highs, lower lows, hanging out around the 200s. Typically is how things look before confirming into a bear market. And then UROY, this one's really clear and much more bearish. We have a high, a low, a lower high, a lower low, another lower high, rejection at 200 exponential and simple. Looks ready to roll over. Cannabis stocks, CGC, again, looks like it's rolling over 821. You guys know I took profits on these. I'm not going to get stuck with massive upside down positions. So this one, look, you guys know I'm done with the cannabis stocks for now. So I still leave these trade setups on here, but I'm not going to just wait until this comes down here and stops me out. Tilray getting wrecked right now, going to new lows. ACB, same thing, just pathetically weak. Looks like it's going to new lows. 821 cross back to the downside. Sundial, same thing, cross back to the downside. Very, very weak. Hexo, very, very weak. These things all look like they're headed to new lows. And then FCG, First Trust Natural Gas ETF, just looks like a lower high still for now at the 786. Roll back over to the 618. We'll see if the 821 crosses to the downside. We'll start looking at these next targets. Still should be bullish on this for now. Looks very close to the 200 simple crossing above. tells me we're running out of steam. So we're already seeing some of the European natural gas prices are rolling over. There was obviously a lot of news lately about, how Europe actually has like plenty of natural gas, that a lot of that scare was, priced in. So everybody rushed into it expecting it to be much higher and there to be this mass energy shortage. But in all reality, they just had to buy back a ton of energy to shore up their reserves for the winter at just really high prices. So it's likely more of a one-time event for now, and maybe has passed, hopefully. But realistically, into the future, there's still going to be some definite tailwinds for energy going into the future if something big doesn't change, which it doesn't look like it's going to. So while the next few months we could easily see a big pullback in natural gas or energy in general, long term it's still very, very bullish. Next winter it'll be very, very bullish leading up to it again if nothing changes. And nothing's likely to change in that shorter period of time. So in all reality, it's not crazy to think we see big pullbacks in the meantime on some of these commodities, followed by, years or decades of bullishness. Commodities, energy, physical assets, etc. So we'll see what happens. Obviously, right now, the main trend to pay attention to is energy is still the strongest of anything. Gold and silver are definitely losing strength. And then the dollar and yields are still very, very strong for now. So we'll see what happens. We don't want to try to call tops on the dollar or yields. If you could pick anything in the whole market to bet against, why bet against the strongest thing? It's just not my style. You can obviously do whatever you want. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Just think outside the box. Think, what if I'm wrong? Like, this guy's right. The dollar has run so much. And it, not me, obviously. Someone else saying, like, the dollar has run so much and it's going to top out and the dollar's going to zero and blah, 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 blah. And as soon as that happens, everything else is going to rip and it's a melt up in gold or crypto or whatever. Sure, but just make sure that you understand the markets can stay irrational longer than you can stay liquid. If you start betting against something turning and then it doesn't turn for 2 months, are you still okay? What about 6 months? Are you still okay? What about a year? Are you still okay? 2 years? 5 years? What if it runs for 10 more years? What if you're right and the dollar's going to zero, but you're wrong about the timing and it takes 10 more years? Are you still going to be liquid? Are you still going to believe in this trade? Did you find enough reasons for yourself that you will be able to stay strong in a 10-year bear market in your trade? Upside down 99% before it 1,000x's. All you have to do is just hold on with a 99% loss for 10 years. I mean, if you have that level of conviction, by all means. But in order to have that level of conviction, you better believe that you believe whatever it is you're selling. You're not just buying somebody else's snake oil. Because like everybody that's been saying silver was going to new all-time highs was all the people selling it. I don't see anybody buying your silver for new all-time high prices. Why are they selling silver? If I was like, oh, I'm a silver seller, and you're like, oh, really? Well, like, if it's going to new all-time highs, why are you selling it? And you're like, well, I get paid on the spread. And you're like, wait, so you get your money from the difference between what the price of silver is and what you're willing to sell it to me for? Yeah, that's how I make my money. So then doesn't that incentivize you to have a big spread and make it seem like silver is going to go higher? Well, yeah, of course. But I mean, it doesn't mean it's not going to go higher. Well, sure, but I mean, can I trust you? Can I believe you? If you're the guy selling silver, making the spread, telling me how high it's going to, I mean, just be cautious of things like that. Oftentimes the people who are most bullish on an asset have the most to gain one way or the other. So, some people are super bullish on an asset because they have a bunch of it, which could be silver or gold or stocks or whatever. Other people are super bullish on telling you something's going to go higher because they make money off the spread of selling it to you. It's very rare that you find someone who's telling you how good something is and how it's going to go higher that doesn't make money off of you. So please be aware of that. And that's something to evaluate people by when they give you, not trading advice or not stock advice or, whatever. What incentive does this person have? Do they get a lot more views and get like a cult of followers by telling me that Tesla's really good and it's always going to go higher? Interesting. So if you just say really good stuff about Tesla all the time, you'll have, 10 to 100,000 subscribers and you'll get paid a few $100s per video to just come out and, talk good about Tesla all the time. Well, that's an incentive, and also maybe I'm invested in Tesla, et cetera, et cetera. So, evaluate that. Oftentimes you'll find the best channels on YouTube for good information and also bad information are the channels that are focused on a specific, crypto or stock. And I'm not singling out Tesla right here. I just know Tesla is a very strong cult. The same way you'll find a cult for XRP, the same way you'll find a cult for Cardano, you'll find a Bitcoin maxi cult. It's just important to pay attention to this stuff and think, okay, are there other incentives possibly, for this person to give me one side of the story as opposed to like the unbiased truth? Is this person reading me the news, or are they only giving me the good side of the news or the bad side of the news? Are they actually doing technical analysis, or are they just telling me what other people are posting? And it's fine. Any of those things are okay. As long as you understand, that's what you're getting. So I think right now, the most important thing is, if something's in a strong bull trend, let's just assume it's going to stay in the strong bull trend. If something's in a bear trend or entering into a bear trend or already in a strong bear trend, let's just assume it's going to stay in that bear trend. And I think we'll all keep a lot more of our money, make money on the way down, and then also have, a lot more like, I don't want to say confidence, but, I guess a lot more confidence in the trading strategy. If we trust the strategy and follow the rules, we'll be better off in the end, in my opinion. Trading with the trend, risk-reward ratio, making sure we keep relative position sizes. Like if somebody told me right now, hey, I have a plan, and my plan to invest in crypto is to take my stack that I want to have invested, and I'm going to divide it into 10 pieces, and I'm going to put one piece in every month, for the next 10 months. Okay, I would say, okay, if that's your plan, what is the best case scenario? What's the worst case scenario? Well, best case scenario, I get all my money invested at lower prices, and then the price immediately goes higher. Okay, that's legit. You have a plan. What's the worst case scenario? Well, it goes down and just stays down for like 10 years, and I just hodl it and it goes till zero. Well, that's okay because you have a plan. Your plan could be whatever yours is, but you just want to have realistic expectations to the bullish side, to the bearish side, best case scenario, worst case scenario. So a lot of times when you make an investment or a trade or whatever, people will say, I don't care if it goes to zero. Well, everybody cares. You don't want to lose all your money. What you're saying is that there's enough upside potential that even if I did lose all my money, it would be worth taking the chance because I've calculated it. And if I take this same chance enough times and I'm right, according to my setup, I'll still end up profitable. And that's something like Ethereum. If somebody told me, hey, my target for Ethereum is 20,000 because it's the 1.618 Fibonacci extension from the previous all-time high to the correction low, assuming that that's already in, and that we should go to 20,000 in the next less than 10 years. Maybe it'll be 1 year, maybe it's 9.5 years. But that's my goal. And I would say, okay, that actually makes perfect sense. And you say, so it either goes to zero and I get taken completely out of my trade, or it goes to 20,000 and I 12x my money. And that would make perfect sense to me. The same way that if somebody said, well, I'm waiting until it gets to 400 and then I'm going to buy and then I'll 48x my money when it goes to 20K. And then if somebody said, I'm going to buy at each of those levels on the way in, any of those are acceptable as long as you have realistic goals and what you're expecting. And then also, when do you take profits? Make sure you have those take profit targets. Make sure you stick to it. Make sure you at least have a trailing stop or something like that. Because the last thing you want to do is Dogecoin millionaire it, ride it all the way up to, where your net worth's over $1 million and then straight back down to where, you're actually like barely up or break even or even under. I mean, think of how many big crypto, influencers and investors and all these people like talk about, they're transparent about their portfolios, which I respect for sure. But now they're saying, well, I'm just like slightly underwater now. Really, after like 2 years, 3 years, many of these guys in Bitcoin case over 4 years now investing, XRP case, it's crazy to think that people could have been investing for this long, been massively profitable at times, and then now they're underwater. That just blows my mind. I don't know. I don't know how you do it. I would have to just have some system to know, hey, this is when I need to take some chips off the table. Once I double my money, once I quadruple my money, once it reaches a certain target, just something. And I think scratching down a couple rules is the first couple steps to building your own trading plan. And in my opinion, the first thing right off the bat for your trading plan should be, like 4 check boxes basically. And does it meet these 4 criteria? Like, I know I have a higher probability of success if I trade with the trend. So am I trading with the trend on that time frame, on a longer time frame? Whatever your criteria is, am I trading with the trend? Yes or no? Because right off the bat, if you start noticing, hey, I did 10 trades and they all were bad. And then you're like, let me look at the top of the paper and see if I notice any similar things. And it's like, were you trading with the trend? No. Were you trading with the trend? No. Were you trading with the trend? No. You're like, oh, okay, that's easy for me to just see with my dumb brain. Hey, every time I don't trade with the trend, I get a lot of trades wrong. And that's easy to see. And then same thing, what was my risk reward? If it was against the trend was at least 2-to-1. If it was with the trend, I'm sorry, the other way around, against the trend 3-to-1, with the trend 2-to-1, check the box. Did it meet my risk reward criteria, which is minimum of 3-to-1 if you're trading against the trend, or 2-to-1 if you're trading with the trend? And you can alter that. You can have it be whatever you want. That's mine. I'm just telling you my rules. So if you have that in your rules, and then you can go through 10 trades in a row or 100 trades in a row, and you say, okay, a lot of these were fails. What the hell am I doing wrong? Or you're like, man, I'm on a streak lately. I have just been crushing that ass. Like, I'm the master trader. Let's see if we can pick up on the trend, and then we can go through and just keep doing that because we're having great success. So you look through and it's like, oh, did every single one trade with the trend? Yes. Did every single one have favorable risk reward? Yes. Did every single one, going right down the list. Going right down the list. And then eventually, you'll see, okay, look, if I would have just went all in on Ethereum on this one trade, I would be way better off than trading, a portion of my account. But if I went all in on one coin, I would have lost all my money. So that's why we look at, the importance behind dividing up our stack into a bunch of pieces. So God forbid one of our, we bet on a bunch of dogs and one of them shits the bed, has a heart attack, goes to zero, pulls a one coin. It's a scam. It gets hacked. No matter what happens, it goes to zero. It's not that big of a deal. Like, it sucks. It definitely sucks, but we're not out of the game. We still got 9 lives left, even if we lose one stack. So that's why it's so important to have position sizing. Because again, when people talk about oh yeah, we were talking about this in the group one day. One of the guys asked me what's my target P&L, or what am I going for? And whatever market I kept it simple, obviously. Whatever market I'm trading in, I want to beat the market. Otherwise, why am I doing this? And if I'm not beating the market by a bunch, am I spending enough time that it's worth even doing this? Or should I just be index fund and go do something else for fun or for money? So that's really what it comes down to. And when we were discussing it, I basically said, look, I just want to beat the market, whatever, 1% a month if you're going for the stock market, 12% annually, as of recent years, is pretty damn good. And that's a lot of money when you really think about it. And he was saying, yeah, a lot of people would say oh, if I can just do 1% per day. And you hear people say that all the time. If I could just do 1% per day, think about, I could double my money in no time. But when you actually do the breakdown and think, okay, so if you're going to do 1% per day, you have to be using your whole stack, right? You have to be using all your money, and then it has to go up 1% per day. Because if you're using any kind of risk management, that's not possible. You would literally have to take your 10 investments, and then you would have to put your 10 investments all in something that does 1% up per day. So you would have to have 10 investments that were all 100% right and all moved 100% in that day. And then you would just have to do that every single day. That's not realistic, because you're probably going to have a couple things go up 1%, a couple things go down 1%, something jumps up 10%, something goes down 10%. You're going to have big moves and everything. So the only way you're going to get that is, okay, I picked 10 assets. I put 1/10 of my money in each of those assets, and then each of those assets moved up 1% with a 100% success rate. It's just not going to happen. So you have to start looking for ways that you can find favorable advantages and get closer to that scenario, but you're never going to reach that scenario. Not over time sustainably. One, a lot of things don't even move 1% in a day, and you're like, well, crypto moves, 1% up and 1% down all day, every day. So as long as you buy the bottom and sell the top perfectly, you're okay. It's just not realistic. So, find realistic goals, figure out how you can get an advantage, and then use that to make money. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. I'm going to go ahead and wrap it up there. Keep this one relatively short. What's going on, Yoda? Good to see you. I hope you guys had a good weekend. Everybody enjoyed themselves. I took a little bit of time off, enjoyed myself for sure, relaxing, all that good stuff. Nice weather out here. So hopefully everybody else did also. We got the holiday tomorrow, markets closed, and then after that, back to reality. As far as Bitcoin and crypto, definitely watching that 821 cross on the 4 hour. That's our first sign of life. So far, it's been a little battle going on there. So, but we're going to wrap it up. It is 9 p.m. Eastern Standard Time on September 4th, 2022. I'm, of course, Crypto Trend Trader, and this is our Sunday evening market outlook. And, of course, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and, of course, trade responsibly. And, you know, if you're one of those people out there that's always like, I should get together a trading plan, or like, man, that's such a good idea, I should do that. Like, just get a pad of paper or a couple of pieces of paper or whatever and just start scratching down stuff and just, like, start working out your trading plan. Start working out your strategy. Like, you know, writing down little basic rules. And then after a while, kind of refine it a little bit. And then start actually keeping track. And then next thing you know, you're like, oh, wow, look, this is like the real deal. I'm actually taking notes. I'm actually like doing responsible stuff. I mean, I think that's a great way to get started is, you know, one step at a time. So start writing down, hey, why does this trade look good? And then even if you don't take the trade, even if you're just paper trading, when it goes right or it goes wrong, be like, okay, what didn't I see? Why was this a good trade? Why wasn't it a good trade? Etc. And then you can look back at that, and then it gives you confidence over time because you start saying, hey, when I see these trade setups, and then I look at them and say, okay, this is my target, this is my stop loss, it plays out a lot of the time. So maybe I'll put a couple bucks behind it. You know, maybe I'll do whatever. So that's it. Everybody have a great one, and we'll see you guys on Wednesday for our 8 p.m. Eastern Standard Time live stream. Everybody have a good week. Enjoy your Monday.